For those of you working diligently on your Project 1, our next step will be the payroll and operating expenses. And you see it'll be due February 10th, which is a week from Thursday, something like that. That's going to cover 4 worksheets in the Excel workbook, but really there's not a ton of things that you need to enter. So the operating expenses will get a little bit involved, but still not too bad. So let's take a look at it. Okay, I would like everybody to include, even if you've picked the simplest of businesses, include a little bit of labor. Okay, probably a part-time employee, and I'll get to that in a second. Okay, number 1. Okay, 99.999% of you will have a business that's called a pass-through entity. Okay, pass-through entity is one where all the profits or losses of the business are passed through to the owner or owners. Okay, in that case, almost always, again 99.99% of the time, the owner does not pay themselves a regular paycheck. We'll address what the owner takes out of the business when we get to the cash flow. But at this point in time, please put nothing in for owners. Okay? The only exception might be if you think you're going to want to have a C corporation and pay yourself. You could make a case for that. I will tell you, you'll be facing a big-time uphill battle. Okay. Aside from that, you know, the employees. Then let's say you want to have one full-time employee. You're going to pay them $15 an hour. You just plug that in, and they're going to work 35 hours a week. It's probably a minimum, 30 at least hours for somebody we might consider a full-time employee. Part-time employee, we might have one of those. We're going to pay them $12.50 an hour, and they're going to work 20 hours a week. Okay. The top part there is that simple. Just kind of make some estimates. And for a lot of you, you've done what I asked, and that was to have a simple business. So you're probably going to end up with, maybe you're just going to have one part-time employee that's going to work 5 hours a week. Okay. Maybe they're only going to work 2 hours a week. Okay, that's fine. Okay, you can just kind of make something up there. I just want you to put that in so you can kind of see the impact of things. Okay, the other thing that you need to include, that I want you to include, again, it's kind of a teaching moment here, but we all have to pay. If we have employees, we do have to pay workers' comp, at least in Montana. I would assume in most other states as well, but in Montana, we have to set aside some money for workers' comp. Workers' comp really depends on the type of job. Okay, somebody in a clerical position, workers' comp is going to be relatively low. By low, 1 to 2% maybe. Okay, and if that's the case, I'd put 1.5% in there. Okay, so it's going to cost me $2 a month. If you were a roofer, roofing contractor, and you had to hire somebody to help you with roofing, it might be more like 75%. Okay, what that is that's a percentage of what they're getting paid up here. Okay, there are professions or businesses or jobs that are near 100%. Logging might be there. Some of them might even be over 100%. Roofing's probably one that's up there. People tend to have accidents doing those types of jobs, and they tend to get hurt pretty badly. A clerical person might stub their toe on the way to the donut room, but for the most part, they're free of accidents that might occur on the job. So again, for the purposes of this class, I don't need you to go out and look a bunch of that stuff up. If you want to Google it, feel free to do that. But just kind of make an estimate. I gave you some parameters there. You can kind of think of where you might fit in that, or where your job might fit in that, and plug a number in there. Okay. Then payroll 2, and this is kind of a fault of the program. I don't know why, and I probably ought to fix it. it's got some built-in increases here, and most of us probably don't like that. We wouldn't like the idea of giving our employee a 20% increase one year and 30% the next year. That's a pretty good increase, right? So we may want to lessen that, and for whatever reason, part-time was in at 10%. But here's the key thing on this particular worksheet. If I change that, or even if I left it at 10%, okay, you'll note that down here, all these are at 20%. And I can't, if I'm only going to give my employee an increase of 10%, these can't be 20%. They would have to be 10% as well. So in this case, I'm going to give my employee just a 5% increase. I need to then come down here and do 5% for these top four. Okay, you can see there's nothing else that I probably have down here. Workers' comp, I guess. But that's, that's just estimating an increase there, and that's probably okay. Surprised I didn't bring over the workers' comp. I'll have to check on that. Oh, that's because I changed it back to 0. So if I change that to, again, my 1.5%, there we go. And that's fine. 3%, so it's hardly enough to even affect it. And I might want to do the same thing then for year 3. Maybe I'll give them a 10% increase this time. But again, if I change it up here, or I need to make sure anyhow that this matches. That said, if you have both full-time and part-time employees, make sure the increases that you give them are the same. It's a little bit of a limitation of this particular template, but it'll work for our purposes. It'll get us close enough. So just make sure that these would be the same if I did have a full-time person, right? And then I got to come down and make these all 10% as well. Then you're done with the payroll. Okay, don't overdo it. It's not that difficult, but listen to those, for sure things that I told you that you need to do. Then we're going to get to the operating expenses. And the operating expenses are, they're fairly clear. Okay, they give you a pretty good list here of things that you're probably going to encounter. I've told you not to change too many of the white spaces. This is one place where, if you didn't have travel, meals, and entertainment, but you had some other kind of an expense, you could feel free to change that label. You might have to do the unprotect sheet thing up here, right? Okay, but you could go ahead and change that label if you needed to, if there was one of these you weren't going to use but wanted to add something else. But okay, here you go along, and you're just inputting some monthly expenses. So in my advertising, I think I might have to have $150 a month. Okay, and I'm going to drag that out, okay, in November, just before Christmas, so I'm going to bump that up. So I might come back, because I'm going to advertise the heck out of, my Christmas specials and whatnot, okay. Car and truck expense. You may or may not have that. If you're actually purchasing a vehicle for the business, then you're going to have some, obviously, and in that case it's going to be gas, maintenance, those types of things. It wouldn't be unusual then for that to be, $200 a month, but every third month you might have to be $300 a month because you got to get the oil changed and do those types of things. Okay, if you're, on the other hand, let's say that you're starting a small business, but you're not buying a vehicle, you're going to use your personal vehicle. You can actually let's say lease your personal vehicle to the business, and the business would pay. And generally, I think what the IRS allows is about 56 cents per mile. So if you estimated that you were going to use your personal vehicle for the business and do 100 miles a month, right, be 56 bucks. Okay. Again, I can grab that and just kind of drag that down then. If I thought there were some ups or downs in there, I could certainly do that if I had a seasonal business, for example. Commissions and fees, most of us won't pay that if you were paying a commission to somebody. Fees, I don't know. There might be some certain businesses that might have those. Contract labor, that's a real possibility. You got a little office, and maybe you don't want to clean it yourself, and so once every week anyhow, somebody comes in and does some cleaning for you. You pay them $30, $120 a month then or something. So you might have that, and that's what that would be. That's people that would sort of work for you, but they are their own boss. They have their own business and they're doing it, and so it's kind of considered your contract labor. Insurance other than health. Here you should have on the starting point put in, right? I told you to put in the full first year's premium, like $1,200 maybe. Okay. Well, in that case, then on my operating expenses, I don't really want to put anything in there. Okay. At least not until the 12th month. And this might make some sense that then in the 12th month, I might have to pay another $1,200. It's probably going to go up some, so maybe I'm going to have to do $1,250. That's going to goof up my first year's income and cash flow just a little bit, but otherwise too, if I don't do that, it's not going to show up on my second and third year. So there's other ways we could get around that, but that's an easy way to do that. Okay. Legal and professional services, most of us won't have any of those other than maybe in April I might pay somebody, $500 or $1,000 probably to do my taxes because I hate doing taxes. Okay. Licenses, some of you may need licenses. If you do, again, you had it on the starting point, so it might be something that if you get down here, you might have to renew that. Okay. Office expense. Almost everybody's going to have a little bit of office expense. Okay. I get a lot of these backs, and they'll have zeros in them, and because it's a, mechanic shop. Guess what? You're still going to be sending out bills probably. You're going to need some paper. You're going to need some stamps. You're going to need some things like that. You're probably going to have a Square or some other type of credit card processing thing. Okay, so everybody's going to have some office expense. Maybe small, but we'll put that in. Okay. Rent or lease vehicles, machinery, or equipment. A lot of you wouldn't have anything here. Most of you probably would not have anything here, but some of you might, and some of it might be seasonal. Some of it might be something that you'd have every day. If you're in the snow removal, I think somebody's going to do snow removal. Well, maybe you just want to lease a tractor or with a loader on it for the winter or something like that you just lease for 4 or 5 months out of the year. Okay, if you did that, you'd come up, and that'd be month 11 and 12 and 1 and 2 probably, and maybe 3 March, right? Okay. For a lot of us, though, you're going to lease your location. Okay, you're going to lease a building or a spot at the mall, something like that for your business, and that's where this is going to go. Now, if on your starting point and your rent deposit, let's say your rent's going to be $500 a month, and they want first and last month's rent plus a $500 deposit, so you might have put $1,500 in there. Okay, when I get to here, my first month then is going to be nothing, right? Because I've paid for that actually on the starting point. But then I'd put my $500 in here, and I'd carry that down. There we go. Repairs and maintenance, kind of like office supplies. Most of us are going to have a little bit of repairs and maintenance. Wouldn't be much. Okay, maybe for a lot of you. For some of you, it might be a lot, but for okay. But just plan on having something in there, whatever that may be. And even if it was seasonal and you wanted to put in, let's say you thought you're going to have $300 at the end of the year, you might want to just do $25 a month and just kind of accumulate money in an account you'd be doing, in a sense, to get to that point. Supplies. Most of us are going to have supplies. Don't confuse supplies with inventory. Two completely different things. Inventory is what we sell to a customer. Supplies are things that we need in our business. Okay, if we've got a restroom, we got to stock it with hand towels, to dry our hands, and toilet paper, and we got to have a little some cleanup stuff for the bathroom. We got to have some rags. We might have to have a mop and some Pine Sol or something to mop the floors. Those are supplies. Okay. And for a lot of us, once again, that's going to be a relatively small number, but it's going to be a number, and it's going to be something that you're probably going to have to go through on a monthly basis. Might be 10, 15, 20 bucks only. Okay, for some of us, it might be a few $100 if we have big needs in that regard. Travel, meals, and entertainment, that one could be. Okay, I'm going to put something in for supplies. 20 bucks, I'll say, right? And you should have had some supplies on the front end too. But that should have just been for those supplies you needed to get going. And utilities, most of us will have to pay some utilities. That's going to be water, sewer, gas, electric. Right? Those are the common ones here. There might be some other ones, but that's pretty much it, I think, for most of us. It depends on the size of your business, depends on the type of your business. For another class, I got a guy doing a car wash. Man, ooh, lots of water, sewer expense there. Can you imagine the gas that's going to be required to heat the water, especially this time of year? Electrical, lots and lots of utility expense there for the person that's just got an office and they're going to rent a spot up at the mall. Might be $80 a month, okay, that type of a thing. But most of us probably have some type of a utility expense. If you had a mobile business, let's say a mobile oil changing business, so you're not going to have any garage or any place to do any of those things. You're just going to do it all out in the field. You might not have any utility expense in that case. Okay, but for most of us, we're going to have some kind of utility expense, and we extend that out. Okay. The last one's miscellaneous, and that's just your catch-all. Okay, that's going to be if there's something else that you can think of for your particular business. And again, if you wanted to change that label, you can do that. Feel free also to come out here. If you got something that you think's a little unusual and you don't want me to comment about it, you can put some notes out here. And hopefully, I'd see them then and say, "Oh, okay, I get that." And that's kind of a nice thing for me. When we get to the second and third years, the first year it brings it all over. Okay, it calculates an increase of about 3%, maybe 5% on some of them. Okay, but mostly 3% for both years, and that's fine if you want to stick with that. I don't see any problems with that. Okay, and so your years 2 and 3 are pretty much done. If you thought that these were going to change, you could change them. I'll give you an example. If you signed a 3-year lease on your property, okay, it's going to be a 0, right? Okay, and you can change this one to a 0 then as well. Okay, now another change that you could make, right? This is only picking up 5,500 because you left it blank for the first month, which is right. But we're going to have 6,000 then in year 2. Okay, and so it's not going to let me change it, so I got to come up, do the review, unprotect the sheet, 1, 2, 3, 4, boom, change this to 6,000. Okay, and then it picks it up for the third year. So yeah, look it over. You might find some things like that you want to make some changes on, and that's fine. Okay, it's relatively simple. If you've chosen a simple business, this should be a relatively simple assignment. Pay attention to those things, no owner's pay, right? Some of those other different things that I told you that were for sure. Please listen to that, and please do that appropriately and get it submitted. Thanks. Have a good week.